Have you ever felt like you're just lost in the fog? Especially with something like crypto, right? It moves so fast, it's often really perplexing.
Absolutely. Dense fog is a good way to put it.
For years, the U.S. crypto scene, well, it's been dealing with this messy mix of state laws, vague federal hints, honestly, mostly just confusion.
Yeah, more confusion than clarity for sure.
Well, that's exactly why we do this deep dive. We try to cut through that noise, that fog, and figure out what actually matters so you can get up to speed fast.
Mm-hmm.
Today, we are diving deep into something pretty huge. The U.S.'s brand new crypto regulations. Specifically, two big ones, the Genius Act and the Clarity Act.
Landmark acts, really.
But here's where it gets really interesting. We're going to look at how these big, broad rules don't just hit the whole market, but how they seem to set up one specific blockchain, Stellar, XLM, for potentially some major growth.
Exactly. That's our mission today. Let's unpack these laws, get into the details, see what they really mean for digital assets overall. And then, yeah, focus on why Stellar seems to be popping up as, well, maybe a major winner from all this.
Yeah.
It's fascinating how regulation, which people often see as a negative,
Yeah, roadblock.
can actually sometimes really accelerate things for the right players.
Okay, let's unpack this then, this new era. The U.S. has definitely made a move, a pivot towards clearer rules with these two laws, Genius and Clarity. This feels like a big deal for everyone in crypto.
Oh, it absolutely is. And, the general feeling in the industry seems pretty positive, surprisingly, maybe.
Really?
Yeah, I mean, mostly. People see it as a move away from that murky ambiguity we're talked about.
Right.
Towards something more transparent. It's like, finally, some ground rules after years of, well, kind of guessing. A breath of fresh air for many.
Okay, so let's drill down on the Genius Act first. What's the core idea there?
Well, the main thing, the core mandate, it's actually pretty straightforward, but wow, it's impactful. Stablecoins. They now must be backed one-to-one.
One-to-one by what?
By highly liquid assets. Think U.S. Treasuries, for example. Not just, commercial paper or some vague promise somewhere.
Okay, real assets, liquid ones.
Exactly. Plus, and this is crucial, they're demanding frequent, transparent, external audits. Proper audits.
Ah, external, not just internal checks.
Precisely. And that level of rigor, that's why people are calling it the gold standard treatment for stablecoins. It's a high bar.
So what does that do to the market? I mean, beyond just making stablecoins safer on paper.
Well, think about the ripple effects. For years, you had stablecoins, like USDT, for instance, facing questions about what's really backing them, how often they're audited.
Right, the transparency issues.
Exactly. They often relied on these sort of internal reports or attestations. The Genius Act says, nope, that's not enough. One-to-one backing and frequent verifiable external audits.
So it puts pressure on those less transparent ones.
Huge pressure. It basically creates massive headwinds for, let's say, competing stablecoins with murky backing. It forces a restructuring or they become non-compliant.
Which makes the compliant ones look better.
Much better. Inherently more attractive, right. And not just the stablecoins themselves, but the networks that support them easily. Like Stellar with USDC.
Yeah.
They suddenly look a lot more appealing to institutions, to bigger players.
Okay, so Genius sets a high bar for stablecoins. Makes sense. But what about everything else? All the other digital assets? That's the Clarity Act, I take it.
That's where the Clarity Act comes in, yeah. It's trying to provide something the industry's been, well, crying out for. A clearer legal framework.
Framework for what, exactly?
Its main job is trying to create clear boundaries for deciding what's a digital commodity, like gold or oil, versus what's a security, like a stock.
Ah, the eternal question. Security versus commodity. That's been a huge source of legal fights and uncertainty.
Exactly. And what's fascinating here is the impact of getting that clarity. For years, this uncertainty has been a major barrier. Is this token an investment contract? Does it fall into the SEC? Or is it more like a utility, maybe CFTC?
Right, huge legal risk for projects.
Massive risk.
Yeah.
So the Clarity Act aims to draw that line. And if it succeeds, even partially, it dramatically lowers the legal jeopardy for projects. It gives exchanges, developers, and especially those big institutions, much more confidence to actually, use and adopt these digital assets.
Okay, so we've got the Genius Act demanding transparency for stablecoins and the Clarity Act trying to sort out the commodity versus security mess. Now, connect the dots for us. How does this suddenly make Stellar XLM stand out? Here's where it gets really interesting.
It really does. So let's start with the Genius Act's effect. Stellar, as a network, already has really solid support for USDC.
Which is generally seen as one of the more compliant, well-regarded stablecoins.
Exactly.
Yeah.
It's widely recognized, relatively transparent already. So this new law, it basically turbocharges Stellar's existing role in things like cross-border payments.
How so?
Because using USDC on Stellar now comes with this, like, official stamp of regulatory approval. It gains huge institutional credibility.
Okay, so those payment corridors.
Right. Cross-border remittance corridors using Stellar and USDC, they become faster, they stay cheap, and they're now clearly regulatory approved. That's a massive advantage.
And the flip side, those other stablecoins facing headwinds.
Yeah. As they struggle or have to adjust, Stellar's ecosystem, already compliant with USDC, just looks even more attractive. It can pull in users, liquidity, maybe even projects that were previously on other networks.
Okay, that's a clear boost from the stablecoin side. What about the Clarity Act? How does that help Stellar specifically?
Equally important, maybe even more so for XLM itself. The way the Clarity Act is shaping up, there's a strong possibility, maybe even likelihood, that XLM, Stellar's native token, will now sit firmly in the commodity category, not a security.
And that means less legal hassle.
Bingo. Significantly lower legal risk surrounding XLM itself. That kind of legal certainty is gold. It boosts confidence for everyone, exchanges listing it, developers building on Stellar, institutions considering using it or holding XLM.
So it's not just about payments, but the whole ecosystem built on Stellar.
Absolutely. Think about decentralized exchanges, DXs, built on Stellar, or smart contracts. They all benefit from this reinforced legal protection for the underlying network and its native asset. It just makes the whole environment safer and more appealing for innovation and adoption.
Okay, now there's another piece to this legislation, right? Something pretty controversial, the CBDC ban.
Ah, yes. The controversial twist. Provisions in the legislation aimed at banning, or at least severely restricting, central bank digital currencies in the U.S.
Which is a whole other debate, privacy versus modernization.
A huge debate. Advocates see it as protecting privacy, preventing government overreach into transactions. Opponents worry it hamstrings the U.S. financially on the global stage.
But setting the debate aside, what does a CBDC ban mean practically, especially for networks like Stellar?
It creates a really significant opening, a vacuum almost. If the central bank isn't going to issue its own digital dollar.
Then who does?
Exactly. It creates a massive opportunity for private infrastructure, like Stellar, to step into that gap, to potentially serve as the digital backbone for transferring fiat currency digitally, for programmable money, all built on private, compliant rails.
Interesting. So instead of a government system, the private sector provides the infrastructure.
Potentially, yes. The demand for efficient digital transfers isn't going away. If CBDCs are off the table, the market will look for alternatives.
And Stellar has something specific that helps here. You mentioned ISO something.
Yes, ISO 2022 compatibility. It sounds technical, but it's crucial.
What does it mean in simple terms?
It basically means Stellar speaks the same language as the modern global financial system. Traditional banks, payment systems. They're increasingly using this ISO 2022 standard.
So Stellar can plug right in.
It's integration ready. Think about it.
Yeah.
If banks can't use a CBDC, but they still want the benefits of blockchain for efficiency, for tokenizing assets,
They might look at Stellar.
they might very well turn to a network like Stellar, which is already compliant, already speaks their language, to issue their own tokenized fiat, like a digital dollar issued by a commercial bank, not the central bank, or to run stablecoins on-chain.
So Stellar becomes like a ready-made solution for banks in this new landscape.
It's positioned perfectly. It's like, the rules of the game changed, and Stellar was already training for this specific game. It gives them a huge potential advantage in partnering with mainstream finance.
So pulling this all together, what does it mean for the market perception? You said the industry reaction was generally positive?
Yeah, the overall vibe is relief, mostly. A move from that ambiguity to something clearer. Even if not everyone loves every detail, it provides a path forward.
And for Stellar specifically, what are the expected knock-on effects?
Well, you'd anticipate partnerships could really accelerate. Fintechs, remittance companies, big enterprises, they now have a clearer regulatory picture.
Making Stellar a safer bet for them.
A much less risky, much more appealing platform for collaboration. The regulatory uncertainty was a major drag, and lifting that could open the floodgates.
And what about XLM, the token itself? Any impact expected there?
Analysts are certainly looking at potential upward price pressure for XLM.
Why specifically? Just because the network is doing well.
Partly that, but also because of its fundamental design. It's got this low fee structure. It's built for speed and high liquidity. Those features become even more valuable in a regulated environment where efficiency and compliance are paramount.
Makes sense. Do we have any sense of Stellar's current activity? Like, what's the baseline this growth would build on?
Yeah, there's some concrete data. In a recent 30-day snapshot, Stellar reportedly handled over, what was it, $1.6 billion in adjusted volume,
Wow. Okay.
and something like 9.3 million stablecoin transactions just in that month. That's significant existing activity.
So it's not starting from zero.
Not at all. This raises an important question, though.
Yeah.
You see that base, and then you layer on this potential institutional adoption driven by regulatory clarity.
How much bigger could it get?
Exactly. The question isn't if it grows, maybe, but what's the scale of that growth with this new regulatory tailwind pushing it forward?
It really is pretty remarkable how this whole regulatory shift, which many feared would be a threat,
Yeah, the big crackdown everyone worried about.
actually seems to be turning into a major catalyst, at least for networks like Stellar that were sort of built for this kind of environment.
It really speaks to Stellar's original design philosophy, doesn't it? It was always focused on, financial inclusion, yes, but also speed, low cost, and working with regulatory frameworks, not against them. Harmony was a goal.
So its core architecture just happened to align with where things ended up.
It seems that way. It aligns almost perfectly with what U.S. lawmakers and, frankly, global institutions are now expecting. It feels like it was, in a way, built for this moment.
So the takeaway isn't that regulation is shaking things up negatively, but that Stellar might actually be emerging as a kind of blueprint for compliant, scalable, maybe even decentralized finance.
That could be one interpretation, yes. A blueprint for thriving within regulation, not despite it.
It definitely leaves you thinking, doesn't it? How this regulatory clarity, this shift, might continue to reshape the whole digital finance world. Sorting out which networks just survive versus which ones really take off and thrive.
And what does that mean for all of us, for how we interact with money in the future?
Yeah. What does it mean for your own financial interactions down the line? Definitely something to mull over.